Good morning, ladies and gentlemen. Dornbush download 31 for your viewing pleasure. Andrew, Michael,
good morning.
Good morning. Mate, what's going on? What's happening?
Yeah, again, another typically sort of volatile week, Andrew, hasn't it been? Market up and down. Well, I won't use a common colloquialism there, but
this
anyway,
is a G-rated show,
you can imagine. But yeah, no, it's just extraordinary. Up 70, down 70, up 30, down 30. So yeah.
Even today, I've just went to a meeting, so the market started down 20, it was then down 7. I went, yes, here we go. And it's now down 30 at the time we're filming this. So even intraday, there's plenty of volatility. April shaking ahead, going, what is this about? So yeah, it's interesting times because as we've spoken about before, January we were all feeling sorry for ourselves. Had a huge run up, basically 1,000 points between now and March, and all of a sudden I think people are sort of going, well, what happens now?
Yeah, no, exactly right. And yeah, again, I guess coinciding with companies going ex-dividend, there has been a lot of information to digest over the last few weeks. So again, no real surprise again that we're certainly seeing some profit taking, but we're sort of one step forward, one step back just at the moment.
Absolutely, and yet it's interesting that with the share market having this great run, one thing that we spoke about beforehand was that we've seen a lot of these new product providers wanting to put new companies on the stock exchange, in particular things called LICs or listed investment companies for those playing at home. Do you want to give a very quick overview as to what an LIC is?
Yes, well, they have been very popular and they're certainly very, very good investments in particular circumstances. Listed investment companies. There's a couple of sort of deviations of that these days as well, of course, but really, I guess a one-stop shop, for want of a better word to put it, for the stock market. You sort of invest in this one listed investment company, and through that one vehicle you get exposure to, well, 20, 30, 50, 100 different companies. So yeah, often sort of, based on a similarity between a managed fund, like just a listed version of a managed fund, and of course, we've got exchange traded funds, which are probably more
pure.
Yeah, more in line with a managed fund type structure. The listed investment companies tend to, have that limited number of shares where the ETFs, are able to sort of issue and cancel, shares at any given time. So,
but I think the key difference between an LIC, a listed investment company, and an ETF is an ETF tends to follow an index or a basket. So, the index is going up, and say there's 100 shares in the index, well, the ETF will exactly mirror that index. Whereas an LIC, they have a manager in there and they're trying to sort of outguess the index. So, they might be overweight banks or underweight energy, and that's where they try to add value. We are seeing a couple of LICs cross our desk, so if you're looking for something a little bit different in the LIC space, might be something to look at. Have you had many people wanting to buy banks, Michael?
Well, again, had a few, Andrew. Of course, that thirst for dividend, I suppose, as interest rates, drop and again are looking like going lower still. Again, banks have been very kind to people over a long period of time. So there's sort of that thought that if it ain't broke, why try and fix it? And people are quite comfortable with banks. Certainly, as we've noticed, banks are not cheap at the moment. You're paying pretty lofty valuated prices at the moment. But yeah, there's still a lot of interest in banks. Again, that that 4.5% to 5% fully franked yield does look very very tempting. We are leading into bank reporting season. Banks have that slightly, the majority of banks have that slightly different reporting season calendar. So they'll report their results to the end of March. And certainly at this stage, some of the numbers are going to look reasonably good.
You're spot on. Banks are probably 10 to 15% overvalued. So the rider that I'd put on what Michael just said is if clients have no exposure to banks at all, sure, you'd pick up a few just to get started. And we've spoken about this over the last few Dornbush downloads, the DDs, is that what we 2D, we'll get there eventually. One of the things we've been talking about is if you're overweight banks, and our definition of overweight banks is more than 40% banks in your portfolio, you need to be winding that back. Because if they're 15% overvalued and you've got more than 40% banks in your portfolio, on any re-weighting of banks or any re-rating rather of banks, that's going to come back. And, we've got clients who are 50, 60% banks. Wouldn't say it's going to crunch their portfolio, but it's going to have an adverse effect on their portfolio. So we're simply saying come back to market, wait. Michael, what have you been buying?
Yes, Andrew.
Banks?
I've been looking at a little bit of a Tassal Group. Now, this has been one of Dan's from a little while ago, and I guess in a move towards the agricultural side of things. Tassal down there in Tasmania, harvests and sells and produces Atlantic salmon. Share price has come off a little bit of late, back to about $3.40.
Where was it?
It was over the $4 mark there at one stage, paying a pretty good dividend as well, around about the 4% sort of mark. There's been some reports that one of the Greens senators is basically looking at getting a Senate inquiry into Tasmanian aquaculture. Apparently one of the mussel farmers down there has been making a few complaints that he's getting some pollution through his farm. So interestingly enough, however, the federal government doesn't have any jurisdiction over the Tasmanian fish leases. It's all state government based. And funnily enough, the Tasmanian state government and the opposition don't want an inquiry. So certainly it looks like the market might have dealt them a little bit of a harsh blow. Look, there's a bit of a cloud hanging over it, no doubt about it, but certainly one that we're liking in that agricultural space, paying a pretty good dividend, PE of about 9 times.
So it's not too demanding.
And earnings growth looking like expectations around 30%. So
ticks a few boxes, and they got Woolies and Coles as their two major clients, which is a big positive. Michael, what have you been selling?
Andrew, I've been taking a bit of profit on SG Fleet.
That's been pretty kind to us, hasn't it?
It has. We were involved. Yeah, we were lucky enough to get some of our clients in on that float. Didn't start off too well, but really has rocked away from January to today, up to about $2.45. I think they are at the moment.
$1.85 most people paid.
Yeah, so $1.85. So I think the maths is up about 33%, something like that.
Plus a dividend.
Plus a dividend thrown in as well. And really, Andrew, I mean, my thoughts on this are more that the federal government's tax discussion paper came out the other day. And again, this issue of salary packaging, FBT, was sort of raised. Nothing specific regarding novated leases, which is sort of SG Fleet's game. But, where there's smoke, there's generally fire. So it might be worth taking a bit of profit out on those.
And it's not a core holding, it's an emerging leader. So, yeah, I agree with you. Certainly I'd be looking at winding a few of those back. Anything else you want to cover off, Michael?
Not really, Andrew. No. Again, I think it'll be all eyes on the bank reporting season, back to banks again. We'll see how those numbers stack up. But I think we're probably in for a bit of a bouncy ride over the next few weeks. But
without a doubt. And of course, Reserve Bank meeting next Tuesday. And most importantly, happy Easter.
Have a good Easter. Bye now.